Alright everyone, welcome to the second video on the technical analysis segment. In this video, we'll be discussing trends. A trend shows the overall direction of a security. Remember, when we say security, we mean a tradable financial asset, which in this case will be a stock. If this is an option trading course, why do we care about stocks? If we go back to the basic definition of an option, it's a type of derivative. The definition of a derivative is a function of a variable that measures the sensitivity to change of the function value with respect to a change in its argument. Or to simply put it, a derivative is something that is based on another source. Now let's apply this definition to options. In the previous video, we defined a derivative as a contract whose value is based on the performance of an underlying financial asset, or the mathematical definition, a variable. So that means an option is dependent on something to change, to influence the price movement. What is that something? I'll give you a hint. That's right, a stock. One of the main factors that increase or decrease an option contract value is based on the stock price movement. The stock is the variable, or we can simply say that the stock is something that is based on another source. This is why we study technical analysis when learning how to trade options. We must be able to identify potential price movements based on past performance. Remember, past performance do not guarantee future results. Technical analysis is designed to provide us with the likelihood of something performing the same as it did in the past. The first part to learn technical analysis is trends. A trend shows the overall direction of a security. You have two types of trends: an uptrend, which is a price movement consistently going up, and a downtrend, which is a price movement consistently going down. Now there's a third type of trend, but we will discuss that later. Now let's get into it. An uptrend have higher swing highs and lower swing lows. That means that the lowest points are getting higher than before, and the highest points are getting lower than before. Now let's take a look at an uptrend. Here comes the basic algebra. Yes, you have to know this. It won't be too hard to understand. Stock charts are graphed as price over time. An uptrend doesn't go up forever. If it does, it will look vertical. A vertical line is not necessarily a trend, and is usually an indicator that a stock has been oversold or overbought. A trend moves in waves, as a series of peaks and valleys or highs and lows. I know there is a saying to buy low and sell high, but you don't want to buy at the lowest point or at the lowest low point. This is why it is important to identify the different types of trends. We'll discuss the best entry point strategy in future videos. On the other hand, we have downtrends, sometimes referred to as pullbacks. A downtrend is the complete opposite of an uptrend. In a downtrend, we have lower lows and lower highs. It's easy to confuse a lower high with a reversal or an uptrend. That is why it's crucial to be able to identify downtrends so we don't enter in at a bad position. If you think a stock will continue to go down, then it's not a good idea to buy a call option. The last trend we have is a sideways trend, sometimes referred to as consolidation. A sideways trend is when a price movement do not change much. On a candlestick chart, we will see a lot of dojis. A doji is this fancy little symbol that shows that a price of a security opened and closed near the same price. A sideways trend is not a good entry point either. To remember what a sideways trend means, think of it as people saying, I don't know when to buy. Later in this course, we will discuss a few good entry points to enter a position. To summarize, think of an uptrend as people saying, yes, I like this price, and a downtrend as, no, I don't like this price. In the next video, we will discuss more about how people feel about price movements.